Okay, so what would it be like to buy this house in Washington State? This is in Monroe. It's listed at $560,000. You can see there's been a price cut. That is kind of a feature of the market that we're in right now. It's certainly not all one way, all the other. I just had a client come in third place when there were 24 offers on a house. So it's definitely still across the board, but there are some properties where they're sitting and prices are being cut. So there's opportunities there. This one's listed at $560. I'm going to walk you through what to expect if you were trying to buy it. A little bit about the area of Monroe, and then the process of buying if your offer gets accepted. If you're more familiar with the process and you just want to see what the pricing would look like on this deal, this is today. This is real time. I'm going to provide a 5% down and 20% down scenario, assuming 740 credit. Then you can skip down to that part of this video. My name is Chris Buteau. I'm a mortgage broker in Bothell, Washington. Cleveland Street Mortgage is our company. And if this video is helpful and you want to ask more questions, more specific questions, just there's a link you can, there's a phone number, of course, you can call me, you can text me. There's also a link where you can sign up. So anyway, let's just talk about Monroe a little bit. And rather than me just sort of pretending like I know all these facts, I know Monroe. Actually, my first house was in Monroe. I bought a house in Monroe in 1989. My very first house, 900 square feet, $77,000, and that was a hot market. Obviously, things are different today, but rather than me pretending like I know everything about it, let's go to Wikipedia. Monroe is a city in Snohomish County, Washington, located in the confluence of the Skykomish, Snohomish, and Snoqualmie rivers, near the Cascade foothills, about 30 miles northeast of Seattle. Had a population of 19,000 as of the 2020 census. And it's been growing. It's a beautiful area. And you can see here, it's got this kind of quaint mid-century old town area, beautiful. Really quaint, really fun. And then they've got, beautiful country estates out there. It's kind of rural. It's located close to the mountains where you can go jump off and go skiing and things. So it's really a great community. And I happen to have 2 kids that live there as well. So, great community, really, great place to live. So this is a house we're talking about financing. Now, the first thing I do when I look at financing these is I want to know, well, let's talk about the process of making an offer. So if you make an offer, one of the first things you're going to want to do first is you're going to look up your mortgage guy. Let's say it's me. And you're going to say, hey, can you look at this property and can you give me pricing? And we'll have understood already kind of what your cash available is and how much down payment you're going to put, what kind of loan program we're going to use, what your credit scores are. We'll know all that. But we'll want to update everything for this specific property and specific price, because rates change every day. This has specific interest rate, property taxes. And one of the things that's convenient about Zillow is that just, they have a little spot down here where you go in. You can actually click on a link in Zillow and it'll take you right to the county tax. There it is, county website right there. And I already did that and it's here. One of the things that's interesting that I learned about this that I didn't quickly pick up on when I just looked at the picture and I saw the description, it's a single family residence. But you click on here and you go, oh, it's a condominium, but it's what's called a zero lot line condominium. And I think you see that somewhere. Here it is, common wall, what we call zero lot line or common wall. And so this is just good to know. Now, because it's a common wall condominium, it's financed more like a single family residence. And so you're not going to have the same kind of issues, but you might have a homeowners association. There's other things just to be aware of when you get alerted to that. But the main reason I go here to the county website is I want to know what are actual property taxes for this property for the current year. It's $4,215. So I went ahead and put that in my pricing so I know exactly what the property taxes are for this property right now. So you would do all this in deciding, do I want to put an offer on this property? Because you want to know what are rates today, what's my monthly payment going to look like, how much cash do I need, and then you go and make the offer through your real estate agent. And then if you're the winning offer, basically you're generally going to have 30 days or less to close that loan. So you're going to want to jump back in with your lender right away and say, hey, we won the deal, and now we need to close in 30 days. What do we do? What do we do? And so, excuse me. So I'm going to take you through just a quick little breakdown of the 5% and the 20% down financing options for this property and talk a little bit about that. So let's look at this. So here is the basic pricing scenarios. Here are the 5% down options and the 20% down options. If you were to buy this house, you can see if you put 20% down, of course your payment's lower. It's $3,750 a month. Now this is a conventional 30-year fixed rate, assuming 740 credit. 740 credit, isn't the very best credit. It's very good credit. It's not the very best you can do, because I want to make this not only for that only the people who have the most stellar credit available would actually get this pricing. This is, if you have better credit, then especially on the 5% down option, mortgage insurance costs tend to be pretty sensitive to interest, to your credit scores. And so if your credit score is a little bit better, then your mortgage insurance cost might come down on this. But you see here's the 5% down option. Your total payment all in is $45.18. You've got your principal and interest, your mortgage insurance, your taxes, and your regular homeowner's insurance. And those are all components of this cost that you're going to pay on a monthly basis. Of course, when you put less than 20% down, you're generally going to have mortgage insurance involved. And then you have your overall cost. This will tell you what your total cost cash to close. Here with 5% down, of course, you're going to have a lot less cash to close than you will on the 20% down option. And that's why you're going to have a higher mortgage payment here. But those are those are numbers now qualifying. $45.18 a month, generally for someone with decent credit and a 30-year fixed rate mortgage, conventional product, your qualifying is going to be up to 50% of your total monthly, of your gross monthly income. So if you make, in this case, if you have no other debt, right? So no other debt using up part of your qualifying ability, $45.18, you just double that. That's about $9,000. You'd have to make about $9,000 or $9,200 a month or so in order to qualify for this loan, because that would bring your debt-to-income ratio right about 50%. You make anything more than that, you should be fine. Anything less than that, it's probably going to be a challenge. Now, there may be other programs that let you go a little bit higher, for example, FHA or VA. So, depending on what your situation is, you may still qualify for this. But this just assumes a conventional 30-year fixed rate mortgage and their qualifying guidelines. Here's the 20% down, and you see your payments significantly less. You're at $37.50 per month. And now you're, $7,500 a month that you have to make in order to qualify. Same 50% DTI. Putting more down doesn't expand the debt to income ratio limits that you can go to. But of course it does lower your monthly payment, and so then your income requirements are going to be less. I hope you can see this on there. These are, I am still experimenting with how to best do this. But give me a call. If you're interested in a more detailed explanation of this mortgage process and how it all works, give me a call. Check out the other videos on my channel. Happy to chat with you and go into great detail. I love to meet in person. I find just the transfer of information is much more effective when we meet in person. But of course, a lot can be done over the phone, at least in terms of initial setting expectations, establishing goals, and giving some general guidance. So please give me a call. Take a look at this video. Let me know what you think. And thanks for watching.